State your name and where you're calling from.
It's Gerald D. Rogers, Jacksonville, Florida.
Good evening.
Alfred Buckley, Silver Spring, Maryland.
Good evening. We have about 1 minute before we start. Please state your name and where you're calling in from. Good evening, everyone. Please state your name and where you're calling in from.
Tatiana Denson from Tampa.
Good evening.
Hi, Miss Dyer.
Hello. How you doing?
I'm good. How are you?
Outstanding.
Okay, everyone, it is 9:00. 9:00. Once again, good evening, everyone, and welcome to the BYOB Tools Training Call. This is going to be a marvelous night tonight. BYOB, Be Your Own Bank. And I have the great pleasure tonight to introduce to you one of my wonderful business partners, one that I always call the major, the one that's in control, and that is helping to the utmost everyone that she touches. She knows 100% of what it takes to have success. She likes having a lot of fun, and most importantly, she loves helping people. Please welcome one of our very own superstars in this BYOB movement, Miss Tasha M. Dyer. Good evening, Miss Dyer.
Thank you so very much, and good evening to you as well, Miss Axon. So, ladies and gentlemen, I just want to thank Miss Axon for introducing, taking the roll call, and she is phenomenal. So if you happen to be in the Orlando area, if you ever happen to be in her presence as well, she is definitely a woman of influence and definitely someone you want to take instruction from, definitely someone you want to learn from. So I just want to thank you so very much for being on this call this evening. But ladies and gentlemen, we are here tonight, and we had a wonderful Tuesday. A wonderful Tuesday, talking about the BYOB cash out. So yes, we'll definitely be trying to get back to that this evening. However, what we're going to talk about tonight is pivots. We're going to talk about the pivots. I told you last week that we were going to revisit this. And this is so very important because what we're doing with this BYOB movement, what this BYOB challenge is about you accepting the challenge to be your own bank. And by doing so, what we see in the path that we're on, by today in 2021, write this down. Today in 2021, we will have financially educated 1 million families. And that is definitely something to get excited about. So are you ready to accept the challenge to learn how to be your own bank? It's just that simple. You are going to be financially educated, financially independent, and financially free. Now, the pivots. We want to take advantage of the tools. We definitely want to take advantage of the tools. And when I say take advantage of the tools, see, if you have just enrolled, if you are new or getting started, this is definitely included in your package. But if your grandfather, meaning that you are in before the convention, you actually enrolled, you accepted the challenge before then, what you see are pivots. And we have the opportunity to take advantage of this until the 1st. So that's why we're talking about this tonight, because I want to make sure that everybody is taking advantage of this information. Everyone is taking advantage of how to trade. This excites me. These pivots excite me because if you heard my story before, if you've heard me speak, and learning and studying the foreign exchange market, I was studying pivots. I was learning the pivots. I had been, they are, with the market movement, they are calculated, and no, we don't need to know the calculations. We don't need to know how it works, but look at they're calculated, but look at everything that you can trade with the pivots. I mean, literally everything that you're able to trade. So this is significant to me. And the reason why it's significant to me is because of my background, because of where I came from, because I am a financial advisor, because I saw the foreign exchange market when I was enlisted in Germany before I transitioned to be an officer. I handled payroll. We handled the exchange because I was my first duty assignment. I was stationed overseas. But being a financial advisor, when you're doing your retirement account, when you are handling those things with a financial advisor, one of the questions we ask is, how much risk are you willing to take? How much risk are you willing to take? And that determines your portfolio. That helps us determine how we build your portfolio. So with that, you see this foreign exchange button. You look at what this is. So with this foreign exchange market, this is where your money goes. This is what happens. This is what happens, and this is where it goes. And now they're talking about, they're actually putting cryptocurrency into your retirement account as well. So you have the best of both worlds. I have absolutely nothing against planning for your future and planning for your retirement, but what about today? What about my today? And what has happened, and what these tools do is put you in a position to where you're winning. You're in a position to where you're winning. So we're gonna look at these tools. We're gonna look at the pivots. So when I pull up the pivots, like I said, I get my choice of what I want to trade. But what we're gonna focus on tonight is the foreign exchange market. So we've already gone over one strategy, but I'm just gonna recap just for a moment. I'm gonna recap. So I'm just gonna pick a currency. Now, when I pick this currency, as you can see, this one is perfect because it's kind of doing what I wanted to do for what I want to share with you this evening. So when I pick this currency, understand when you first look at this, you see a lot going on this chart. It's a lot on this chart, but I want you to focus, look at the candles, look at the pivot lines, look at what we're focused on, and look at what we're looking at. Just kind of focus on what you want to see. So the pivot point, the market adjusts. As I explained before, these pivot points, they adjust and readjust with the market movement. That's what they do. So a pivot point is the one that is directly in the middle. It's the line between all the supports and all the resistance. So what these lines indicate is support and resistance. Now, support and resistance strictly means that if you notice, when you see different lines or when you see different areas, you kind of see that's where the currency, you've heard me say that the market repeats itself. So if you look, you see when it gets around this green line, if I look to the left, you see that these currency pairs, these candles, the candles in this currency pair, which is AUD/JPY. So what happens is they get there and it turn. So what the market is trying to do is keep them in between these pivots, or they're going to continue to move. So they're always bouncing back and forth between support and resistance lines. So when the market adjusts and the market gets to a pivot point, which P4, if you can see, I know it's kind of light, but the P4 is actually your pivot point. That is your pivot point. So above that is resistance. Below that is support. Now, actually, I want to try to highlight it. Give me a second. Actually, between your R5 and your S3. Now remember, your actual pivot point is always the one that's directly in the middle. That's your pivot point. But between R5 and S3 is where 44% of your trades happen, somewhere in that percentage range. So basically what that's saying is that's where most of your trades happen. So that's why you see this is our entry. We always enter here. And that's going to take us up to the stop loss, or it's going to take us down to the take profit. Okay? That's what that does. Now, it's that simple. No matter what currency pair I pick or what currency pair I select, I'm going to see a sell stop. See, this is a sell stop because what is happening, this is a sell, and it's happening to be coming back down in this direction. So this is a sell stop. So what a sell stop means is I'm not entering the market until I reach that point, which is my P4. So when I reach my P4, I want to take profit at my S0, which is my last support line. That's where I want to take my profit. Now, understand that's because the market is pretty much going to be held within the support and resistance lines. That's where I hold the market, between my support and resistance lines. So I can pick different currency pairs and we'll kind of go through a few others, but picking those currency pairs, that is where you're definitely going to see that they all start and enter around this P0. P4, which is the middle, which is the pivot point. Another point of confirmation that you can use is you see this moving average line. We have two moving average lines, okay, on the chart, two moving average lines. So if you look to the top, in the top left, you have your 50 moving average and you have your 200. The 50 is in green, the 200 is in red. So when they cross, when the 50 crosses the 200, so in green, the 50 across the 200, if it crosses above, it's a buy. So basically, if that green line crosses the red line going across, it's a buy. So right now, we see that it's at the very top of this position. So that actually supports that because the market is going to continuously move. If you look, I didn't mean to go that fast. If you look to the left, what is the market doing? The market's going down and up and down and up. And that's what the market does. So the market just goes up and down, up and down. And so, and every now and then it goes sideways, as you can see, but the market goes down, the market goes up. So as it's right now, we have the 50 crossing the 200, which is the red line. So I have the green line crossing the red line. As you can see, it hasn't actually crossed yet, but it's crossed. So that means that's a strong support that the market is moving in an uptrend, meaning the market is moving in a buy position. And if I come this way, which it actually supports, look at the green. The green crossed over the red. So guess what? It's going in that direction as well. Another thing, what did we just learn on Tuesday? We learned about Hikinashi candles, right? What the Hikinashi candles do is they show you a trend. They show you what the trend is. They remove the market clutter. So I just changed the candles to the Hikinashi candles, right? And do you see the difference in the chart? This is good. The regular candles are good because you get to see all the movement, all the buys, all the sales, all the buys, all the sales. You get to see everything that is happening, everything that's transpiring. And that's very, very good for your market analysis. That's very good for your technical analysis. You learn all of that as you go through the academy. So all of this, these candles are excellent and we need them. We need to know we need to understand pullbacks. We need to a pullback, which is how this is going in an uptrend, but the market pulls back with these red candles a little bit. The market's going up and then it pulls back. So we need to understand all of that. So I don't want you to replace your candles. I don't want you trying to do any market analysis with those candles. But when I want to identify a trend, when I'm strictly trying to identify a trend, I can change it to my Hikinashi candles, because that is what they're used for. They're there to identify a trend. And just as we just confirmed, the green line is crossing over the red line. Where we are on there here, it is happening right now. So it's crossing over. So I have a very, very strong uptrend. As you look at the candles, that you don't see all the pullbacks, you don't see all the market movement because they remove all of that. However, you see a strong uptrend here, and then you see a strong downtrend, because what they do is they strictly identify the trend. So I can look at this chart right now, and I know that I'm in an uptrend. So yes, it says sell stop, but it's not in a sell position just yet. So this is a currency pair that you can watch. This is a currency pair that you know something is about to happen soon. So you can download an app called Call Levels. You can put that price in there. And once it hits, then you can turn around and enter the market if you want to do it that way. Or if you want to wait till it gets closer, till you can be sure that the market has turned around. So even if you want to put an alert up here around R6, just make it your personal preference. Play around with it. But if I, put an alert around the R6 line to where you can be sure that the market has turned, that the market is headed in a direction that you want it to be headed. So in this case, we want the market to head in a sell direction. We want the market to go in a downward trend, a sell, so we can profit off the sell. And when we do that, then we see that is our entry point is at the P4, our take profit is at the S0, which is the support 0, because it moves, the market moves up and down. And our stop loss is at the R8. Now, it's a 1-for-1 risk reward ratio. You can always, as the market moves, you can always move your stop loss every time. So for example, let's say if I came to this pip, every time I'm about 30 pips or so, depending on how many pips this is, but as I transition up to my support lines, as I'm moving down into that trend, I can move my stop loss down. So I'm reducing my risk. That's what I'm doing. So I'm reducing my risk. So, and just to show you on this currency pair, this one is about 20 pips. So this because I'm on a 15-minute chart. We're doing this analysis off of the 15-minute chart. So as we increase, or based on currency pairs, that will be more pips. So we'll look at another one in a little bit. But right now, before I go any further, do I have any questions? Questions or comments?
Ms. Dyer.
Yeah.
I know we're talking about pivots, but I just looking at the same here with the Hikinashi candles. Although we're anticipating it turning around at the pivot to turn into a downward position for a sell, because of multiple strategies that we can take from this particular chart, is it also possible to take advantage of that uptrend before it turns down?
Most definitely.
Could you show us from a ruler standpoint what that would look like, that the benefit of knowing what we know, we can take advantage of the market going up and down?
Most definitely. So look at what we learned on Tuesday. We learned about the Hikinashi candles. And as you can see, you look across the bottom right now, these are flat across the bottom. So basically what these candles do is they identify trend. And so I have that highlighted. So I'm gonna come over here. So looking at these candles, right? I'm gonna try to make it bigger. I wanna make sure you all can see it. So looking at these candles, right? So based on the question that Mr. Rogers just asked, and this one is actually just about perfect to go into the next strategy as well. But when I look at what's happening right here, look at the candles across the bottom. They're pretty much flat across the bottom, right? So when the Hikinashi candles are flat across the bottom, that means that my trend is still strong and in a buy position toward a buy. So my trend is still strong. And as you can see, it started at around that S0, the bottom support line. So that trend is strong. However, when they start showing wicks across the bottom, you see we got some strong wicks. That means that I'm having a trend reversal. I'm preparing for a reversal, right? And that's exactly what happened right here. So if I look right here, that's exactly what happened. I had a trend reversal. So I move over to my sell, look across the bottom. My wicks went away and they're all smooth across the top, right? That's a strong downward trend, very strong. And then I turn around, I get my wicks. I got some wicks right here. And what happened? The market turned on me. The market turned on me, right? And it had a little consolidation. So I would not have traded this. Remember, we do not trade consolidation on the Hikinashi candles. We don't do it. And even for the pivots, I'm looking for up and down trends. So, and then that's why we came and we entered here at the P4. So did that answer your question?
Yes, yes. Thank you so much.
Okay. And just so you kind of get an idea, look at the pip count. So this was 30 pips, 31 pips, based on where you would have entered based on the wicks. And if I'd have took this one, that was another 24 pips. So you consistently have opportunity for profit. You consistently have opportunity to put yourself in a position of profit because you are consistently, it's just up and down no matter what the market's doing. Is the market moving up? Is the market moving down? I'm consistently in a position of profit because of that. And then I would have entered the market here because before, I can guarantee you, they had a buy stop entered here and that market moved up. And that's another, if I pulled this right from, so approximately 20 pips, almost 20 pips right here. Exactly. So
Ms. Dyer, real quick, when you just said 31 pips and 24 pips, and this is on the 15-minute chart.
mm-hmm.
So we're looking at the up movement of 31 and the down movement of 24. So that's probably about 55 pips within 30 minutes.
Yes.
Wow.
Yes.
That's exciting.
Mm-hmm. That's exactly correct. And then here, you turn around and it enter here. So what is that? Another 30 minutes or so. And then the beautiful thing about the pivots, what they call, if you look at this, I don't want to come off this currency pair because of what I'm sharing with you right now. But when you look at this, just on what they're calling, because right now the only thing that they're calling is your entry price at the P4 to your R8 or your S0. So you can log on here at any given time and it's at least about 250 trades called, at least. And what the dollar sign means The dollar sign means it's a trade that's already in motion. So I am gonna show you one and then I'll come back to that currency pair. So for example, right here, this trade was already, well, that was not, it just started. And they always retrace a little bit. This is, well, no, let me put the regular candles back on. So you see the difference in the candles? That's why you don't want to do your analysis with those candles. You want to make sure you're using the regular candles for your analysis and everything. But look at the entry price. So this one is just entering. So the wick activated it once it hit that P4. The wick did activate it and is headed all the way up to the R8. So it definitely was activated. I want to show you one that's good and in motion, if they have one. Okay, this is what I'm looking for. So what this is telling you is originally I had a buy, right? And then see how this does everything for you and you don't have to guess. You don't have to try to figure it out as you're learning, like what we just did with the Hikinashi candles is something that as you're growing in knowledge and as you're progressing in knowledge, that they will tell, you can do things on your own as you're understanding the pivots and as you're growing. But as if you are beginning and you're wanting to begin trading with these, that's the purpose of the P4. So as you can see, you see on this one, on this chart, it has a P4 and it has buy, right? And then it has a P4 for a sell stop. So this market was headed in an up position, or it's actually still headed in an up position. The arrow is still showing that it's still headed in an up position. However, what has happened is it says partial closing buy, right? Partial closing, which means that they want to put you in a position where you're not going to lose anything. Remember my stop loss was originally down here. It would have been down at the S0 because we always start at the P4. However, when it reached the R6, which the R6, if you look to the left, it says is a strong pivot reverse. That's what that line indicates. So this is the top of my trading range. On the other chart I just showed you, I have a trading range. And my trading range, where most of my trades happen, and my trading range is between the R5 and the S3. And look what they did. They labeled top of trading range, bottom of trading range. So you don't have to try to just remember this as you're learning. It literally tells you what is going on. So this is a strong pivot reversal. So if you get to these red lines, if they get outside the trading line, this is a point of a strong reversal, which means that the trade could turn around. Not saying that it will, but if you notice these wicks over here, it keep hitting it. You notice right here, the wicks keep hitting it. Look at the wicks on these candles. That's why I'm gonna keep emphasizing. We can use the other candles, the Hikinashi candles, to identify trends, but these candles are important to make sure we understand what's going on in the market for analysis. So these wicks keep hitting this pivot line, but it's going to break through that pivot line or it could turn around. So they're saying a partial close. However, you moved your stop loss up. It says stop loss buy. The stop loss was moved up. Whenever you see the partial buy, you're going to see that stop loss got moved up. So now this is where I entered the market. So if this happened to turn around, if it just happens to say, you know what, I hit this pivot reversal point and I'm not going any further. And if you see it, and it's turning around, then you can get out of the trade and profit. You can make that decision at that moment. Do I want to push for the R8? Do I want to wait it out? Or do I just say, you know what, I'm going to close my trade right here? Or I'm going to push it. Like I say, push for that R8, allow the market to continue to do what it does, but I'm not going to lose any money. I will not lose on this trade because I move my stop loss up. So it will not go below. So this is literally where you're going to be trading at. And we wait. But as you can see, the market has already identified the fact that you have a sell stop coming. It is now a sell stop coming. So we're not entering a sell stop at this point. And I'm about to tell you why. Once again, the other strategy, but all this is important for you to understand first. We're not entering the stop loss at this moment because the pivots, if they adjust, you'll have to adjust that number. That's why I'm telling you, get an app called Call Levels. Now, the good thing is if they do adjust, you'll never enter that trade. But so, I mean, it's up to you what you want to do, but I don't put it in there just of yet. I wait. And I wait to see what's going to happen, and then if it turns around. Now, up until this point, do we have any questions? Questions, comments? So everybody's with me. And of course, we'll go over this again. This is not the only time we'll be going over it because I want everyone to perfect this. I want everyone to perfect this. But I'm going to go back to that other currency pair because there's something I really want to show you. There's definitely something I wanted to show you and share with you because I want us all to maximize the pivots. If there are 200 active trades called on the pivots, what I'm about to show you, imagine how many more trades there are for you to have the opportunity to take. Now, the market pretty much stays between the S0 and the R8. That's where the market is at. However, pivots adjust. Pivots move based on market movement. So I'm going to draw a line so you can kind of get a visual of what I'm saying. I'm going to get a visual. I want you to get a visual. Outside of these reversals and these.
Ms. Dyer, what currency pair are you on now?
AUD JPY.
Thank you.
So outside of these currency, outside of the resistant points, outside of the support and outside of the support and outside of the resistance, we still need to know what the market is going to do. How do I know what the market is going to do? Just like with the moving average, I know that when this green line crosses over the red line, that it in an uptrend, that if it crosses above, then I have a buy. If it crosses below, then I have a sell. But I also know that if I change the candles, right, I can identify the trend. And look at this, just since we've been talking, look what happened. We changed currency pairs for a moment. And when we came back, we hit our take profit, right? So it hit our take profit. And now it's actually turning around for that sell stop we were originally talking about. And that's why I wanted to be on this currency pair, which is the AUD-JPY. So this is what I wanted you to see. However, what I'm showing you now, if I was to imagine having two lines above and two lines below. So I'm gonna actually put a line there so you can kind of visually see it. Now, what we're doing, what I'm doing, I'm gonna make it a different color and I'm gonna make it thicker. But what I'm doing is I'm just visually, you can visually do it, but it's just approximately the same amount, the same width of each pivot point. So you can kind of get a understanding of what we're doing, right? So that's what we're looking at. Now, okay. So to get to this point, right? If the market gets in between here to here, what happened to my? So in between R8 and up, if the market moves in this range, right, it's a 75% chance that it's going to pull back down to it's pulling back down to the P4, right? And the same thing down here, no different, same exact thing. So everything I'm speaking of up here right now also applies to below the S0. So above the R8 and below the S0. As you can see, if I scroll left, right, the market hits outside of that range sometimes. So if the market moves, see, the market is within this range. The market's within this range. It's above the R8. So if the market goes above the R8 or below the S0, then it's a 75% chance that the market is going to pull back and stay within this pivot range. If the market happens to go, and I'm going to put it over a little bit, between here, with two imaginary pivots above, because they're actually not pivot points or resistance lines, but we have to do it ourselves. So if the market goes above by 2 of them or below by 2 of them, because the same thing applies at the bottom, it's a 95% chance that it's going to pull back. But for that 5% chance that it doesn't, those pivot lines are going to shift and they're going to readjust. For example, you see how this market is outside of the pivot range? So when we were here during this time frame, the pivot lines were also on the market at this time frame. So pivot lines adjust based on market movement. So what I'm saying is it always helps you. It always helps you identify what's going on. So what I'm saying is when I see, I'm going to use the bottom because those pivot lines readjusted. So what I'm saying is if I'm on the pivots and I'm looking right here, right? You're gonna, it's typically gonna test those lines. It's gonna test that S0 and it's gonna test that R8. It's typically gonna test it at least twice. This one tested 3 times, but typically at least twice. So I don't get it. Do not get into these trades until you see it test at least twice or you really see that it turned around. Okay. Now, you see that it came below and it went back up. You could get in a trade, but when you see it coming around, just get out. I mean, because that's still an opportunity for you to get about 18 pips, right? That was 18 pips from the S0 up to the P4. That was 18 pips that you could have grasped. However, you see the market came back because it's going to test it at least once or twice. So if you do get into it the first one, you want to make sure that you are having expectancy and you're paying attention to your trade that is going to test it again. Because this one actually went all the way up to the P4. But sometimes they don't do that. They just kind of, like if I look up here, this one didn't test that much, but it was also coming back down. But I'm quite sure I can go over and see where it don't test. But they always test about at least twice. If they don't test twice, that's not the norm. They always test at least twice for the most part. But I still could have taken, like we just said, we still could have taken almost 20 pips to that P4. Now, and it's not a long time frame that you're looking at. I mean, literally, it has 1630 right there. So it's not a long time frame. So what that happened over course like an hour or two. So it's not a long time frame. And then it retests and it came back up, and this one actually happened to test again. So even with that, right? On the uptrend, it was still another 14 pips, right? And I'm on the Hikinashi candles. Got to remember to change them back so I can see the actual market, because I want to look at the testing of the market. So it came down and it went back up. It came down and it went back up. So you can kind of see how it got to this range and then it broke through. But then you can kind of see where it came back down, because it's testing that support line. And it did not break through it. So because it got here, it's a 95% chance that it's gonna pull back into it. It tested that line, come back around. This one got tested 3 times. But then you can literally take this trade. You can ride this trade out to the R6. I typically go to the R6. But look where this one went. It went all the way to the R8. So from the R6 all the way to the R8, that was 44 pips. Now, any questions? Because I'm going to show you on another one as well. Any questions? I want to show you on a higher time frame. And this is why I do the red line, right? Because that's the strong pivot reversal point. That's why I do the red line. I don't go further than the red line. You always want to strategize and follow rules. Now, if I was going to go like the last one went further, then I'm moving my stop loss all the way up. So you don't want to get greedy just because you think something can happen. But those red lines are your strong reversals. That's your strong pivot point. So as you can see, just like we just talked about, let me make this one bigger so everybody can see it. Okay. It tested it twice, right? It came up, it came down some, and it tested. You see where it's testing it again? So we're testing the market. This is where it really tested it. It tested it again. And then what happened? $117 pips on the hour time charts. 117 pips. Can somebody get excited about that? And that's not the one that they called. That's not one that they called. And when the pivots call the trades, when the pivot scanner calls the trades, you're literally looking at least 250 trades at any given time. So this is what they're calling. This is what they're calling. So when you see these and they test it, and when you see that they test it, 117 pips. But when you see, I want to show you, hopefully I'll see it. While I'm looking, I have any questions? Okay. Right here, for example, This one is part of that 5% that did not go pull back. So and I've seen the pivot lines move when this happened. But look at this. I want to show you. So I'm expecting, based on what the information I just gave you, I'm expecting to do a buy from here and go to know what I'm trying to do. Go to the R6. So I'm expecting to go from here to the R6. If this is where I'd have been, because I'd have been looking at it tested, I'd have been looking at it test. Oh, it came and tested again. And it tested again. So, okay, it tested it a couple times, but when you get, I'm just trying to make it bigger so make sure you guys can see it. You see, I got 2 strong candles in the wrong direction, right? So let's say I had entered the trade based on that. Let's just say I had entered the trade. And I came here and I got 2 strong candles in the wrong direction. Those are nice, strong candles. And they're not side by side. They're not anything. Look, they're strong candles headed in the wrong direction. That's a strong indication that's a very, very, very strong indication that this is going in the wrong direction. And it's headed not the direction. So I'm not staying in that trade. Let's just say I had jumped in over here, right? Let's just say I jumped in. But I got over here and I saw these strong candles going in the wrong direction. And they're strong because why? Look at this. This candle is headed in a downward and it's nice, long, and thick. And then this doesn't start right next to it. This one literally starts beneath it. So guess what happened? The pivots had to adjust. These pivots adjusted. They're not there anymore because they readjusted and moved up. But at this point in time, when we were here, it pulled down and it recalculated and it adjusted the pivots. So I did not and could not, I would not have been in a buy position. This is in a sell. So this was just a strong indication that like I would not have stayed in that trade. But come on, load. Here we go. And here we go. So GPP CAD. You looking for one to analyze for this evening? For when the market somewhere around 2 or 3 o'clock in the morning. Now, of course, it's gonna do something before then, but that's when this market opens back up, the London session in the morning. So, but as you can see, here we are testing this line. So we're gonna let it test it again because it's gonna come up. We're gonna let it test it again and see what's happening, right? We're gonna wait to see, and if it only does it once, we're gonna wait to make sure it's a good, strong up position before we jump in a trade. However, we take this trade, it tested and it tested and it comes back. Look at that, 363. 363 pips. So when I talk about being able to set it and walk away from it, so Tuesday we were scalping, which means 10 pips and dip, 10 pips in and out the market, BYOB cash out. You can go back and watch that video. We'll be talking about that again next week. But that's the BYOB cash out. But these pivots, you saw what we did on the 15-minute chart. We're talking about 20 pips here, long-term 70 pips. But now the more and more you get, into it. I have a trade on, I want to say that I'm still in right now. I have to count the pips, but I mean all the way up to the daily chart. So if you want a swing trade, which means set a trade and leave it for a couple days, a month, you can visit the daily chart because that's going to be longer. You want to be in and out the market? You want to be in and out the market? 15-minute chart. Our chart, as you can see, this is not in and out, but that's 363 pips. There's no reason why everybody can't eat off of this. Everybody can profit. Everybody can learn this and use this tool and be in profit. Absolutely everybody. So we got about 5 minutes for questions, comments, testimonies. Anybody use the pivots before? Comments, questions, testimonies. Got about 5 minutes left.
So, Ms. Dyer, what you're saying is if someone dives into the academy, no matter what their schedule is, they have the opportunity to take as much money from the market as if they choose to, if they're committed to the process.
Absolutely. Absolutely. I mean, what we did is you can begin just based off what you're saying, dive into the academy before you even truly understand how to the movement of the market. You can look at just look at what they give you. I mean, this trade was called today. So you're looking at a buy stop. They tell you it's kind of faint, but it's on there. So I don't know if you can really see it, but they tell you your take profit and where it's at. So it's highlighted in blue, or the sky blue, light blue, sky blue. It's highlighted. And then the entry price, the buy stop, look, it's the same. The pivot that you're going to enter is the exact same color as the P4. So if I'm doing anything on my S2 or my R6, they're in red. So the pivots are highlighted. The call price is highlighted in the exact same color as my pivot point. So it's easy as 1, 2, 3. It's just that simple. It's as easy as 1, 2, 3. And then just like this currency pair right here, it's going to test it. It's going to test it. So we just have to wait to see. We're not going to just enter it. We just have to wait to see if it's going to continue in that position, but we can start here and move all the way up to the R6. And so all the analysis is done for us. And then if you want to confirm your trend, just look at the Hikinashi candles, but just remember, don't do your analysis off of it. And look at how smooth the market looks now. It smooths out the market. So look at the candles. It smooths out the market. And you can identify the trends. And just as we just talked about, because we know how these candles operate, because we know what these candles do, they're smooth across the bottom, that means a buy. They're smooth across the bottom, that means a sell. When the wicks began to form across the bottom, just like this happens right here, that means I'm having a reversal. And it's going back down into a sell. And this one was never a strong uptrend. I would not have taken it. because, I mean, it's got wicks, so you can tell it's not a strong uptrend. When I have nice smooth bottoms and strong candles, nice uptrend. And so we can also use these candles. So it's so many different things we can do. We can use these candles and get some pips. That's 190 right there. Oops. So we can continue. That's 140, but let's just say I waited till I didn't have a wick. I just started with my wicks moved out. That's still 91. So it's continuous profit in here, continuous. So before we transition this call, and understand, we're gonna go over this again. We're gonna do pivots. We're gonna continuously do pivots. I mean, it's so many ways to make money in here. We're gonna continuously look at different tools, different strategies, but we're gonna continue to look at pivots. It's so many different ways to profit. It's so many different ways to put yourself in profit just in the pivots. And then don't forget, look at the moving average lines. What's that green line doing? You know, what's my 50 doing in comparison to the 200? It follows that as well. So before we transition this call, do we have any questions or comments?
Well, hi, this is Tatiana from Tampa.
How
I
you
just
doing?
wanted to know. I'm good. How are you doing, Ms. Dyer?
I'm awesome.
I have a few questions. Well, not a few. I just have one question. This will be reposted on the Facebook page because I missed some bits and pieces of the meeting tonight.
Most definitely. It sure will.
Okay. Thank you.
Oh, you're welcome. Any more questions? Well, with that being said, ladies and gentlemen, this is Pivots. And guess what?